Have you ever seen a large green candlestick with almost no upper or lower wick and wondered what it actually means? That candle is called a bullish Marubozu. It is one of the clearest candlestick patterns that can show strong buying pressure. But here is the important part. A bullish Marubozu does not automatically mean buy. To understand this candle correctly, you need to look at its trend, support, resistance, volume, breakout, retest, time frame, and risk management. So in this video, tips about the bullish Marubozu, from the absolute basics to advanced practical concepts. Let's begin. 1. What is a bullish Marubozu? A bullish Marubozu is a strong green or bullish candlestick with a large body and very small or almost non-existent wicks. It shows that buyers had strong control during that particular candle. In a classic bullish Marubozu, the candle opens near its low and closes near its high. 2. The simplest meaning. Think of it this way. If the candle opens near the low and closes near the high, buyers were able to push the price upward without allowing sellers to create a major reversal. It means buying pressure dominated during that particular time frame. 3. Why is the green body important? The green body tells us that the closing price is higher than the opening price. The larger the difference between the open and close, the stronger the directional movement represented by the candle. However, body size should always be compared with the surrounding candles. 4. Why is the lower wick small? A small lower wick means sellers were unable to push the price significantly below the opening area. If there was some downward movement, buyers quickly absorbed that selling pressure. This can indicate strong demand during the candle. 5. Why is the upper wick small? A small upper wick means sellers were unable to push the price significantly away from the high before the candle closed. When the candle closes close to its high, buyers have maintained strong control until the end of that time frame. 6. Classic Marubozu has almost no wick. A perfect bullish Marubozu has the open almost exactly at the low and the close almost exactly at the high. But real markets are rarely perfect. A candle can have tiny wicks and still show strong Marubozu characteristics. 7. The real strength is in the body. The large body tells us that there was a significant difference between the opening and closing prices. This represents strong directional momentum. But remember, strong momentum is not the same thing as a guaranteed future price increase. 8. Never buy just because the candle is large. This is one of the most important rules. Not every large green candle is a bullish Marubozu, and even a genuine bullish Marubozu can fail. Always study the candle in the context of the complete chart. 9. Check the trend first. If the market is already moving upward and a bullish Marubozu appears, it can support the idea of trend continuation. The buyers are already controlling the broader direction, and the Marubozu can show another expansion of that momentum. 10. A Marubozu in a downtrend is different. If the market has been falling for a long time and suddenly produces a strong bullish Marubozu, it may show that buyers are returning. But don't immediately call it a trend reversal. You need additional confirmation from future price action. 11. Be careful in a sideways market. If price is moving sideways inside a range and a bullish Marubozu appears in the middle of that range, its signal may be weaker. The candle may simply be another temporary movement inside the range. 12. Bullish Marubozu at support. A bullish Marubozu forming near an important support zone can be more meaningful. It may indicate that sellers pushed price toward support, but buyers entered strongly and pushed price upward. 13. Be careful near resistance. Imagine a bullish Marubozu forming directly below a major resistance level. The candle may look extremely bullish, but the price could still face strong selling pressure at resistance. Always check how much room exists before the next major resistance. 14. Resistance breakout. If a bullish Marubozu breaks above a significant resistance level and closes clearly above it, this can provide evidence of a bullish breakout. But don't stop your analysis there. Watch what happens after the breakout. 15. A breakout is not just a temporary move above resistance. Price moving above resistance for a short period doesn't automatically mean a successful breakout. If price quickly falls back below the resistance level, the breakout may have been false. This is why confirmation matters. 16. The closing price is extremely important. Where the candle closes tells us how much control buyers maintained until the end of the time frame. A close near the high generally demonstrates stronger bullish pressure than a candle that closes far below its high. 17. Always check volume. When a large bullish Marubozu appears with significantly higher than normal volume, it can indicate strong market participation. More participation can make the move more meaningful, but volume must still be interpreted with price action. 18. Be careful with low volume. If a huge bullish Marubozu appears while volume is unusually weak, you should be more cautious. The move may not have strong participation behind it. Waiting for the next candle or additional confirmation can be useful. 19. Volume alone is not a buy signal. High volume doesn't automatically mean buyers are winning. High volume simply means there was significant activity. Both buyers and sellers can participate heavily. So always combine volume with price structure and closing behavior. 20. Study the previous candle. Look at what happened before the Marubozu. If several small bearish candles appear first and then a powerful bullish Marubozu forms, it may indicate a shift in short-term momentum. Context gives the candle meaning. 21. Several small candles before the Marubozu. If the market has been moving inside a very small range and suddenly produces a large bullish Marubozu, volatility may be expanding. This can indicate that a new directional move is beginning. 22. Marubozu during a consolidation breakout. Imagine price moving sideways inside a tight range for many candles. Then suddenly, a large bullish Marubozu breaks above that range. This can show strong buying pressure entering the market. 23. Look for a retest after the breakout. After resistance breaks, price may return to the old resistance level. If that old resistance now acts as support and price moves upward again, the breakout can appear more convincing. 24. Watch for a failed retest. If price breaks above resistance but later falls below that level and stays there, the bullish breakout becomes questionable. The original Marubozu signal has weakened. 25. Understand the psychology. The psychology behind a bullish Marubozu is simple. During that candle, buyers are willing to accept higher prices, while sellers fail to push price significantly lower. This creates strong upward movement. 26. Buyers can be strong from the opening. In a classic bullish Marubozu, the opening price is very close to the low. That means there was little meaningful downward movement from the opening area. 27. Buyers remain strong into the close. When the candle closes near its high, sellers were unable to significantly reverse the move before the time frame ended. This is why the closing position is so important. 28. Think of it as a temporary buyer's victory. In simple terms, buyers won the battle during that particular candle. But remember, it is only a snapshot of a specific time frame. The next candle can completely change the situation. 29. Time frame matters. A bullish Marubozu on a 5-minute chart and one on a daily chart do not carry exactly the same meaning. A higher time frame candle represents a much broader period of market activity. 30. Daily Marubozu. A daily bullish Marubozu represents the buying activity of an entire trading day. For swing traders, this can provide important evidence of bullish momentum. Weekly Marubozu. A weekly bullish Marubozu represents several trading sessions. If it breaks above a major weekly resistance level, it may indicate a broader change in momentum. 32. Lower time frames have more noise. 1-minute and 5-minute charts can contain significant short-term noise. Temporary order flow or news can create large candles. Therefore, lower time frame Marubozu signals often require stronger confirmation. 33. Start with the higher time frame. If you find a bullish Marubozu on a 15-minute chart, first look at the 1-hour or daily chart. Ask yourself, is the larger trend bullish? Is the Marubozu moving with the larger trend or against it? 34. Trading with the trend can be easier. A bullish Marubozu inside an established uptrend can support continuation because the broader market direction already favors buyers. 35. Counter-trend trades can be riskier. A bullish Marubozu appearing during a strong downtrend may create a possible reversal setup. But reversal trades generally require stronger confirmation because the larger trend is still bearish. 36. Look for a higher high. If price breaks above a previous swing high after the bullish Marubozu, it provides additional evidence that buyers may be changing the market structure. 37. Look for a higher low. After a bullish move, watch the pullback. If price holds above the previous important low and then moves higher, a higher low may form. This can support bullish structure. 38. One candle does not prove a reversal. This is one of the most important lessons. A bullish Marubozu shows strong buying activity. It does not automatically prove that the entire trend has reversed. Future price structure must confirm that idea. 39. Moving average context. If a bullish Marubozu forms around an important moving average and price bounces from that area, the moving average can provide additional context. But don't use the moving average alone. 40. Don't use RSI alone. During a strong bullish Marubozu, RSI can become high. A high RSI does not automatically mean price must fall immediately. Strong trends can keep RSI elevated for extended periods. 41. MACD confirmation. If the bullish Marubozu appears while MACD is also showing bullish momentum, the two signals may support the same direction. But indicators should confirm price action, not replace it. 42. VWAP for intraday trading. For intraday analysis, VWAP can be useful. If a bullish Marubozu pushes price above VWAP and price remains above it, this can indicate stronger intraday buying pressure. 43. Check the market index. Suppose an individual stock produces a bullish Marubozu while the broader market is extremely weak. You should be more cautious. The overall market environment matters. 44. Check the sector. If the entire sector is showing buying pressure and a stock in that sector produces a bullish Marubozu, the broader sector strength can support the setup. 45. Identify relative strength. Imagine the broader index is weak, but one stock produces a strong bullish Marubozu and moves to a new high. That stock may be demonstrating relative strength compared with the broader market. 46. Don't chase a huge gap-up Marubozu. If a stock already opens significantly higher and then produces another huge bullish candle, the price may already be extended. Buying after an extended move can create poor risk-reward. 47. Gap-down recovery. A stock may open significantly lower and then recover throughout the session. If it finishes with a strong bullish Marubozu, it can show that buyers successfully fought back against the initial selling pressure. 48. News-driven Marubozu. Earnings, major announcements, economic data, or unexpected news can create extremely large candles. A news-driven Marubozu may behave differently from a normal technical setup. 49. Don't immediately enter after major news. After major news, price can move violently in both directions. Instead of blindly entering, understand the catalyst and watch whether the price can maintain its new level. 50. A very large candle isn't always better. A candle that is several times larger than normal may show powerful momentum, but it can also mean that volatility is unusually high. The larger the move, the greater the risk of a pullback after a late entry. Part 576. Low volume during a pullback can be useful information. If price pulls back after a bullish Marubozu but the pullback happens on relatively low volume, selling pressure may be weaker. This can be more constructive than a high-volume collapse. 77. High volume during a pullback is a warning. If price falls after the bullish Marubozu and the decline happens with significantly increasing volume, sellers may be becoming more aggressive. This deserves caution. 78. Keep a trading journal. For every Marubozu setup, record the trend, the support level, the resistance level, the volume, the time frame, the entry, the stop loss, and the final result. Over time, this data can show you which Marubozu setups actually work best for your strategy. 79. Study both winners and losers. Don't only study successful Marubozu examples. Study failed setups too. Losing trades can teach you exactly which conditions make the pattern weaker. 80. Backtest the pattern. Go through historical charts and find bullish Marubozu setups. Apply the same entry, stop loss, and target rules to each example. This gives you evidence instead of relying only on assumptions. 81. Separate bull markets and bear markets. A bullish pattern can behave differently depending on the overall market environment. During a strong bull market, bullish setups may receive more support. During a bear market, the same setup can fail more quickly. 82. Sideways markets can produce false signals. Inside a range, bullish Marubozu signals can sometimes create repeated false moves. Instead of trading every candle, focus on important range boundaries and confirmed breakouts. 83. Build a simple checklist. Before taking a trade, ask yourself, what is the trend? Where is support? Where is resistance? What is the volume? How strong is the candle? What is the risk reward? If several answers are unfavorable, you don't have to take the trade. 84. Read the entire market story. A Marubozu is only one candle. What happened before it? Where did it form? What happened afterward? The complete story determines how useful the candle actually is. 85. Put price structure first. Indicators can sometimes provide confirmation, but basic price structure remains extremely important. Focus on higher highs, higher lows, lower highs, lower lows, breakouts, support, resistance. 86. Multiple confirmation can be powerful. Imagine you have an established uptrend, a major support level, a bullish Marubozu, high volume, and a resistance breakout. When multiple pieces of evidence point in the same direction, the setup can become more meaningful. But remember, more confirmation does not mean certainty. 87. Too much confirmation can also have a cost. If you wait for every possible indicator to confirm the trade, price may already move significantly. You need to balance confirmation with entry quality. 88. Skip poor risk-reward setups. Even the most beautiful bullish Marubozu should be ignored if the setup has poor risk-reward. For example, if major resistance is extremely close, but your stop loss needs to be far away, the trade may not make practical sense. 89. Protecting capital is part of trading. You don't have to trade every strong candle. Sometimes the best decision is to do nothing. Capital preservation allows you to stay in the market for the next opportunity. 90. Don't judge a strategy from one losing trade. Every technical setup can fail. One losing trade does not prove that the entire strategy is useless. Evaluate the strategy across a sufficiently large historical sample. 91. Don't become overconfident after one winning trade. One successful bullish Marubozu does not mean the next one will also work. Trading is about probabilities, not certainty. 92. Control your psychology. A huge green candle can trigger excitement and FOMO. Before entering, pause and check your rules. Don't allow emotion to replace your trading plan. 93. Bullish Marubozu is not a guarantee. Remember this clearly. A bullish Marubozu shows strong buying activity. It does not guarantee that price will continue upward. Markets can change direction because of news, liquidity, resistance, selling pressure, or changing market conditions. 94. The best setups usually have strong context. A bullish Marubozu becomes more interesting when it appears alongside several supportive factors. For example, a strong uptrend, important support, high volume, a clean breakout, and strong follow-through. Context matters. 95. Identify weak Marubozu setups. Be cautious when a bullish Marubozu appears directly below major resistance, with weak volume, after an already extended move, or in an unfavorable market environment. A strong candle in a bad location can still produce a poor setup. 96. Ask 3 powerful questions. Whenever you see a bullish Marubozu, ask 3 questions. Where did the buyers come from? What important price level is being broken or tested? Do buyers maintain control in the next candles? These 3 questions can make Marubozu analysis much easier. 97. The most powerful rule, location first. Remember this. Where the Marubozu forms can be more important than how beautiful the candle looks. A Marubozu at major support, during a breakout, or inside a strong trend can mean something very different from a Marubozu appearing randomly in the middle of a range. 98. The second powerful rule, confirmation. After identifying the Marubozu, look for confirmation. Check. Volume. Breakout. Retest. Next candle behavior. Market structure. Don't make your entire decision from one candle. 99. The third powerful rule, risk. Before entering any trade, know exactly where you will exit if you are wrong, how much money you are willing to risk, and whether the potential reward justifies that risk. A powerful signal can still fail. That's why risk management must come before prediction. 100. The most powerful final tip. Now let's put everything together. A bullish Marubozu means buyers demonstrated strong control during that particular candle. But the candle itself does not tell you that the price will definitely rise. The real power comes from the context. Look at the trend, support and resistance, volume, breakout, retest, higher time frame, market structure, risk-reward, and most importantly, watch what happens after the Marubozu. If buyers continue to defend higher prices, the bullish idea becomes more credible. If price quickly falls back through the breakout level or completely retraces the Marubozu, the setup becomes weaker. So don't think bullish Marubozu equals buy. Instead, think bullish Marubozu means strong buying pressure. Now I need to investigate the context. That one mindset can completely change the way you read candlestick charts.